Hey all, greetings to everyone. Welcome back to Samsware, your weekly compliance tracker. We are Samsware Advisory Private Limited, a one-stop shop solution for all of your compliance needs. As promised, we are back with the weekly updates related to global compliance. Before we proceed, let me remind you all to click on the bell icon below to never miss out on any regulatory update that might affect you as a business entity. Let's proceed with our headlines this week. Clarification for interpreting the term appointed date for various transactions put forth by the Ministry of Corporate Affairs, India. The Ministry of Corporate Affairs, India issued a circular on Wednesday, August 21, 2019 to clarify the interpretation of the term appointed date for the purpose of Section 232 subsection 6 of the Companies Act 2013 in relation to the scheme of compromise and arrangement under the prevalent legislative regime of mergers, amalgamations and demergers. The circular clarifies that Section 232 subsection 6 of the Companies Act 2013 allows companies to specify an appointed date in the scheme. This date may be a specific calendar date or may be tied to the occurrence of an event that is relevant to the transaction, such as the grant of a license by a regulatory authority, the fulfillment of conditions or procedures or other requirements agreed upon by the parties, etc. The appointed date specified in the scheme will be deemed to be the acquisition date and the date of transfer of control for accounting standard purposes, including IND AS 103. If the selected appointed date is a specific calendar date, it may precede the date when the scheme is filed with the National Company Law Tribunal. If the appointed date precedes the date of filing by more than 1 year, the parties must be able to provide a specific justification for it in the scheme that is not against public interest. If the appointed date is after the date the scheme is filed with the Registrar of Companies pursuant to Section 232, subsection 5 of the Companies Act 2013, the company must notify the registrar within 30 days of the transaction becoming effective. The French tax rules propose to expand the tax-related reporting requirements for online platforms. Pursuant to the French tax code, operators of online platforms must submit the user's activity report to users and to the French tax authorities with data included about users pursuant to Article 242 of the 112th EU VAT Directive of 2006. These obligations only apply when users reside in France or when there are sales or services made in France as determined under the value-added tax rules. Reports provided to French tax authorities must include information about its own identification elements like the online platform's name, establishment address, VAT number, etc. The identification elements of the users, if private individuals, then their name, identification or tax number, address, etc. Or if a business, then the business's name, place of establishment, VAT number, etc. Additionally, online platforms must provide the amount of transactions conducted by these users. Following the communications of the French government in the context of addressing VAT fraud, a draft decree proposed to expand the scope of data that online platforms must communicate to the French tax authorities. The expanded reporting obligations will require online platform to communicate to the tax authorities the amount of taxable turnover of users' transactions subject to French VAT. Under the proposal, a failure to comply with the new rules could be subject to a penalty equal to 5% of the undeclared sums. This would heighten a platform's administrative liability and could impose greater administrative and technical burdens in determining the location of each of the operations conducted on the platform. The Australian Securities and Investments Commission released the proposed guidelines for whistleblowing policies. The whistleblowing guidelines proposed by the Australian Securities and Investments Commission are intended to help companies comply with the new whistleblowing provisions in the Corporations Act 2001, which came into force on 1st July 2019 and require certain organizations to have a compliant whistleblower policy and make it available to their officers and employees by 1st January 2020. The following types of companies are required to have a whistleblower policy: public companies, large proprietary companies, and proprietary companies that are trustees of registrable superannuation entities. It is recommended that other companies do have policies or other internal guidance in relation to these obligations, given that the penalties for failing to comply are significant. Australian Securities and Investments Commission intends that this guidance should be used by a company to manage risk increase transparency, encourage more disclosures, and to generally foster an ethical internal culture. That's it for today. I request you all to like and share our content. Feel free to comment below with any queries that you may have related to compliance. We will do our best to solve them. You may also contact us through our Twitter handle, Facebook page, LinkedIn page, or our website. Links in the description below. Until next Tuesday then. Thank you.